Hello, everybody, and welcome to Street Smart Investing. I'm Albert, and today I will be doing the sector for Brewers. The Brewers that I have today, there are 8 Brewers companies, or 8 brewing companies, but out of the 8, you can see, okay, so we have 1, 2, 3, 4, 5, 6, 7, and I almost don't even have to scroll down. You could almost see them. So out of the 8, it's really 6 of them, because 2 of the companies, which is Constellation Brands, same company but different classes of shares. So basically it's Constellation and then Tap, Coors, Molson Coors, Brewers. So you have Tap 8 shares, and then the I don't even know, just the regular shares. And then for Constellation, you have B, Class B, and then the regular one. So let me just see something. So yeah, today is Saturday, June 26th. And you can see there's only 8 of them. So let's begin. The highest priced one is Boston Beer. I never even heard of these guys. Whoever's a drinker, you might have heard of this. So I just want to say, first and foremost, the last video that I've done, I thought I would have had more views, but I guess not. Maybe I need to share it more or whatever. I thought it was good info, but I didn't get any views on it. It was talking about what kind of investor you are, and to figure out your goals, your risk tolerance, and everything. I don't know. I thought it would be a good video, but who knows? Maybe I'll post it more often and share it as my main video. So anyways, moving forward for the video, another thing I want to mention is that the next sector that was really actually on the list that started with the B was the banks. But the banks have so many companies. I think they have over 500 banks in the US. So the financial sector is just huge. That's just way too much of my time. I'm gonna need definitely more time to evaluate all that, and that's gonna be broken into parts and stuff. There might even be like 20 videos, maybe even more than that, just to cover like 500 companies alone. As you can see in other videos, I've covered companies where I think it's been up to maybe 100 or 150 in one sector. But yeah, the banking sector is just that's just insane. That's a lot to cover. So that's why I skipped to the Brewers. So anyways, moving on to Boston Brewers. And then also one last thing. The Webull app I always use. You can see it on so many videos of mine. And basically, they updated the app. And I don't like the update. It's just, I think it's horrible. I think it's more confusing than it is now, than it was before. I liked it before. I liked how they used to have the ranking system, and they used to have better categories when they put it into a ranking system. Now they have like, just, I don't know, they just have stupid and ridiculous names for their categories, and it's just, I don't know. It's just, I don't know. It's just stupid, I think. Anyways, could look over this, which is what I'm gonna do. So far this part seems the same. You can see an inflow not too much outflow, so a lot of buying, not a lot of selling, especially the last 5 days. And the markets have been kind of crazy, up and down, this past month, which was pretty interesting. I'm sorry for moving. I'm just... You can see that chart, you guys. So going up, and it's slightly going up, then it looks kind of flat, then it's going up, then it goes back down, it's starting to get flat, but slightly. But yeah, that's an insane price. So moving on to analysis. Recommendations from 15 analysts, blah, blah. I don't even care about this. This is irrelevant because that can go up and down at any given time. So yesterday it's been more selling than buying. That I don't even worry too much about. The cost range, sometimes. The range though, I look at the 90 instead of the 70. And so, let's see, no, I don't care about that. Like this chart, definitely, that chart is definitely helpful. Sorry for the cracks on my screen. I definitely need a new phone. I've been saying that for the past few months, but I can't do nothing about it. You know, it's just, I've been busy, been working, you know, and, you know, life's not easy. So, I do apologize not making a recent video. I've been way too busy. Haven't even had time for myself, but I have time on the weekends now, so hopefully I can get back on track. So here we go. Yeah, this is the info that I want to share. And I always say that, you know, the market cap, the earnings per share, any dividends, the PE ratio, yeah. So it's all there. So, hold on 1 second. So yeah. Okay, so this is what I don't like about the app now. So they have I don't like quarters. I like doing annual. Done. So anyways, for the financials, we have revenue, net income, which is important. So you have revenue and then the net income. I like looking at the charts. I just find it more fun looking at the charts instead of the numbers, because the numbers are being provided there anyway. This is very important too. So profitability, I don't like that. Profitability is basically the earnings per share. Why don't they just say earnings instead of profitability? I think these words and names, they're just throwing people off. And again, I think it's just kind of stupid. They should have just put earnings. Again, you see the rank 2 out of 10. But again, I can't click on the rank. Before the update in the last version, which I was doing so many videos on, you could click on the rank and then you could actually see those companies. So now it's like you have to look at the sector and you have to do it manually. So basically, it's like you have to rank them on your own time. You have to find out which rank has which company. So again, I don't know who's the number 1 company. That's rank 1, you know? And then it's like before you could find that out easy. Now it's like you gotta do some work and find that out. I think that's stupid. It's more of a waste of time. It's harder to evaluate companies because you can't see and compare if there's no list for comparison. I think this was I think that honestly, this was like the most important feature out of everything here of these categories. The important ones that I use is the chart. That one's useless to me. The news is pretty much useless to me. You could find that out elsewhere. Comments are useless to me. The analysis, sometimes I guess you could stay, but I don't look at that all the time. Only for the chart, like I said, which was most important. But if I was to look at one category out of this, I mean the full list in one category, it has to be the company. And I've seen it and I've done it in my videos, but it's just crazy. I just think it's stupid. It's just annoying to see that. So anyways, return on equity, they're rank 1. And basically, they start sharing information if they're above their peers. But that's the thing. You should be able to I don't like looking at these numbers because these numbers always change too much when you draw a line and you say, oh, they're above their peers or not. It's just hard to determine it like that because, again, you don't know which rank is which for which company. So now, in order to evaluate it, just to see the median, I mean, even the median can still be okay. That's what I'm saying. So it's not like, okay, out of the 10 companies, you want that percentage. And then you have half the companies that are above that percentage and below a certain percentage for each sector when it comes to, like, you know, return on equity, for example. So then they're just drawing like a borderline to see if it's good or not. But again, you can't determine that because that number changes like weekly. You don't, like, you know, companies earn profit and lose profit. Yeah, like I just say, like, it don't matter to me. Even each quarter, that's definitely gonna change. But yeah, price changes also. It's just, I don't know. I think it's stupid. I don't know how I'm gonna evaluate these companies from now on. Operation capability, I don't even know what category that was before when I used to do my videos. So they're saying the median of the sector when it comes to operation capability is 0.34. So they're above it. Asset turnover. Asset turnover, debt paying. See, before I used to say debt, now debt paying. That's totally different. I still take it as debt. So then 30% debt because I don't. Debt to asset. So the debt is going up. That's what I see. That's not good. Even though they're ranked 6. I mean, overall, the percentage is low, but I just don't like seeing that rise. You know, even if it's like 2%, like, you don't want to keep piling on debt. Becomes a habit. See, and then year by year, you know, your habit starts to become normal or normal occurrence after so many years. And then that's all it takes. It takes like a year or two, and then that's it. Once you get in the habit, it's hard to break it. Unless they're trying to pay something off and get something in return, you know, like a machine or some factory or real estate or whatever to expand a facility. I don't know what plans they have. So anyways, current ratio, they're ranked 2. I just think I'm gonna click ranks because honestly, some of this information is just, um, it's just not worth it, to be honest. That's all I gotta say. I don't like the info that I'm providing, so I'm just giving myself honest feedback. Um, these words, like I said, these words and names, they're just throwing me off a little bit because it's like it's like I'm not comparing companies. It's like I'm comparing if they're above average or below average because of the information that is being provided to me. So now it feels like, okay, they just have to be above average for me to tell you that it's an okay company. But I don't like doing that because it's like either I can't say that just because they're above average based on each category that they're a good company. No, I have to compare them versus another company. But they're just not giving me that. Hopefully on the next update they get rid of these names and yeah, because this is trash. This is all trash to me, to be honest. Give me the ranking system like they had before and let me compare each company. Not this ratio and percentages and numbers based off the median. I don't care about the median of anything. That's like, are they above borderline? So anyways, I'm sorry I keep talking about it. It's just annoying, frustrating to have stupid information, to be honest. Yeah, my videos are gonna suck now. But I hope you enjoy them anyway, because again, I can't do much based on the information that's given to me. I don't know another application for investing that can provide good feedback and information. So I'm pretty much stuck with what I have and give what I can give. So yeah. All I know is that they're expensive. They're a 13 billion market cap company. Their earnings are pretty high. And that's pretty much it. So anyways, moving on to the next one. Constellation Brands. They pay dividends. So we have 1.35 dividend yield. Market cap is 44 billion. Constellation Brands, ticker symbol STZ. They are worth $228. The chart looks good. It was pretty flat. Then it went up. Then it went up. It's slightly going up. Slightly going up. Slightly going down now. So it went slightly down around this time period right there. So that was around May 14th. So yeah. So inflow, outflow, analysis on the chart. Skip to that. Oh, I thought this line would have been right here. And it would have been like, boom. I thought it would have been like that. But anyways, they got a lower here. So, close enough. I just think this, support was a little bit off. But I could be wrong. Could have been slightly off, but yeah, I thought that's how it worked. No, not quarterly. Let's do annual. So yeah, let's do that annual. Because the 2021, we're only halfway in through the year. So as you can see, PE ratio kind of high. They do pay dividends. Net income was negative. Oh, that's not good. I don't even see it. Before they used to put the bar underneath if it was negative. Now they don't even show that. If they didn't provide this information, I would have thought, oh, maybe they didn't get the numbers yet. Apparently they're negative. That's awful. So negative income. Oh my gosh. Negative earnings, and they still rank year over year. They dropped. Oh yeah, people cut back in 2020, cut expenses. I would not be surprised. That's true. So they had debt paying skills. They went from 63%. That's all a big drop. All the way down to, let's say 53%. Well, I have it there, but I'm just saying. So a 10% drop, 2 years. So that's like 5% each year. Not bad. They have negative 3. Well, yeah, it varies. So, I mean, that's the information they have. So anyways, we have, what is this, current ratio? Current ratio for what? Asset liability ratio. Yeah, that's stupid. That's the same as saying debt to asset. So I don't know why they just say current ratio. See, stupid ass. I think this company, Webull, I don't know, either the developers left or the software engineers left or quit on them, because this update was so stupid. Very, very stupid. It's ridiculously stupid. I don't have the proper info. Next up, Molson Coors beverage. I'm not sure if they made the coronavirus. Corona drink. Well, if they did, there were rumors saying, oh yeah, don't drink it, it's bad luck or superstitions or whatever. But yeah, whatever the case may be, so be it. So tap, we have Molson Coors beverage, $55. Chart looks good. Analysis for the chart, we have that. I would have thought, again, this support line would have been like that, closing in. I would have thought that would have been wedged. I wouldn't see that. And the reason is because of this drop here. If that wasn't a big drop like that, then I think I would have left the line like that. But yeah, that's nuts. So anyways, moving on to the next one. So we have Brewers. These two companies are the same. These two companies are the same. So I'm pretty much almost done. So we have Bud, CCU, and ABEV. Chart looks good, as you can see. Flat, up, flat, then slightly down, then went flat, then it went up again. It broke that resistance. Right around here, it broke resistance. So yeah, they do pay a dividend. I'm not gonna go over that. So there you have it for that sector. More buying than selling yesterday. So yeah, that's what they have. That's what they have. Have that wedge. It's gonna go slightly narrowing down until, yeah. I can't. That's all the info they have. I guess they do. Oh, this is an ADR. So basically, yeah, they are in Belgium. I think that's close to Germany. That's like on the other side of the world. So yeah, that was it. FCCU at $19.60. Chart is down, then went up, then it's flat. Went up again, broke barriers, as I like to call it. Analysis, we have. See, this is what I don't get. Now it's just curving up like that. I don't see that. I see it flat. I see two skinny flat lines like right there. Anyways, that's what they have for their charting. So we have the financials. I'm sure people on their own can look this up. But again, if I have to rank these, that's gonna take even more time. But I mean, I believe they're ranked. It's just the way they set everything up anyway. And it's just more confusing, annoying information because it's just not enough. Hope they change it back to the same version like before. So yeah, CCU, and then all we have is the last one. No, what is this? So yeah, we have Bud, and then ABEV. Flat, up, flat. This company's off of you, that trend and dividends they paid, but still, yeah. If you have shares in this company, yeah, I wouldn't mess with it. And the funny thing is, again, look at charting first, not the price. Because you might have a good chart, but then you look at the price and like, geez, now it's a whole different ball game. If it only gains 50 cents from here to here, big difference earning 50 cents from and doubling your money, or $50 and then watching it take off and close to doubling your money. Big difference. Something to think about. So hardly no orders, no order flow. That's pretty bad. Then we have analysis again. Company. But yeah, I said it's awful before. I'm not even gonna look at the rank. I am not even gonna look at the ranks. So I think as far as me, I'm pretty much done with this video. As far as me recommendations, I mean, for companies in certain sectors, I don't think I'm gonna do that. I'm just gonna try to provide information to you. Even though the new update is not, I don't see it as good or find it as good. I don't think it's good, to be honest, compared to the last version. So yeah, I don't know if they have an option to go back to the old version, but yeah. So again, we have too expensive. I forgot about this one. I forgot. And then the last three. So no, yes, and then let's go over but again. What's the volume? For something so expensive, I can't believe I literally see flat lines. I would expect more curves. So I don't get it. Even though it's a B class, I see that. Still unbelievable. Next up, Molson Coors. So anyways, thank you guys for watching. I can rate them in the description, and I hope the old version comes back, but just adding more info or whatever needs to be done so people can enjoy it is that they need to bring back the ranking system, and that's it. So thank you guys for watching. I know this video is not going to be watched because of the information I provided. Probably talked too long anyway. I apologize for that. But again, I'll list in the description out of this sector which stocks are good at the moment, because things might change. But anyways, thanks for watching, and I'll keep you guys posted. Hope this video helped a little bit for your decision-making process for a certain stock or a certain sector, or even uptrending companies and downtrending companies. So again, hopefully I provided useful feedback. Take it as is. If you're gonna invest in the stock market, be sure to ask a financial advisor. The stock market is just pretty mixed right now, and advisors have insurance and I don't have insurance, so I'm not really allowed to, again, make recommendations. So please be careful with your decisions, guys, and I'll see you in the next one. Thanks for watching.